just double check and feel free to forward it to any of your friends and colleagues, because there's no point if you're sitting in a 5-star hotel with a swimming pool on the roof if you've got nobody to swim with or to catch you, after you've had too many cocktails and fall in the pool. So you do need some friends and some good relationships to make, all the money that you earn worthwhile. So keep that in mind, but tell other people about it as well. Like I said, I worked for many years and got very educated, and always found him amazingly years ahead of everybody else. And I'm just sort of following in his footsteps. So he explained to me how he made a huge quantity of money. I don't know if he'll tell you how much or not, but it's very impressive. And I tried the same thing, and I made a fair bit of money as well. I also advised some customers on what to do, and they made lots out of it as well, enough to buy new cars. So, but I just find that I created a monster with NDIS, and that absorbed all my time. COVID as well, taking 4 years to get a house built, for example. This is very smart, and it's very good returns, and it's completely safe as well. And the first thought that I had, it's perfect for all our customers that are accumulating enormous amount of income into their super funds thanks to their NDIS properties these days. We've even had customers arguing between husbands of wife as to how they're going to spend all the money that comes in.
Great problem to have.
Yeah, it's a good problem. Yeah, first world problems to have. I forgot what I was going to say, but there's excess funds coming into the super funds. We're refinancing people all the time, especially these days since interest rates went from 0.75 to God knows 7 or 8%. And so those excess funds can be used to also invest with Black Diamond and double your money without any risk at all. So I'll let Trent take over and explain it step by step. So over to Trent. And usually we'd ask the questions at the end because he does cover everything in a step-by-step manner.
Perfect. All right. Welcome along, everyone. My name's Trent Richards. As Joe said, I am the CEO of Black Diamond Private Wealth. This is the last of my companies. I've had over 40 companies in the last 25 years, all based on financial services, from financial planning, accounting, insurance, mortgage broking, development, property sales, you name it. I've retired 5 years ago, and this is how I retired. So the bulk of my money is tied up within this company, and I'll go through how that works as well. But at the end of the day, the risk is on the company and on myself and not on you. And this is something that was very important to me when I set this company up, because a lot of clients are asking me to share a bit of my knowledge with the cryptocurrency side. I've been trading the share and stock market for the last 16 going on 17 years. And I got out of that once I got into cryptocurrency, because I could make a lot more money out of crypto and a lot faster than what I could out of the other markets. And that's through trading, but trading is very, very risky. It is very dangerous. I don't recommend anyone do any sorts of trading until you really do learn how to trade. I was saying to Raya earlier, I actually lost $270,000 in my first year of trading. The good news is that was 16 years ago, so I'm well past that grief. But it's something that is very risky, and crypto is very volatile. So what I've set up here is a way for people to make very good, solid returns, but not have the risk. So we'll break this down as we go through, but it's going to be a little bit of a different presentation today, because I can't really ask each individual where you are financially and then tailor this to suit. So I'll just do a very generic presentation. And then anyone who's interested at the end of this presentation that would like more information, we can set up a one-on-one, and I'm more than happy to sit down and go through what we've been through in a more specific way. So let's talk about Black Diamond. Who are we? What do we do? We're a specialist firm that specialises in cryptocurrency investing. Now, there's two things we do. Firstly, we trade capital on behalf of clients. I don't want to talk to anyone here at all today about that side because that is the full risk. What I'd like to talk to you about is the zero risk option. And zero risk is we operate a proprietary indexed fund. So those that don't know what an index fund is, you've probably heard of the S&P 500 or the ASX 300. The S&P is the largest index fund in America. It's the top 500 companies in America. You could go and buy Apple, you could buy Tesla, you could buy FedEx shares, or you could put the same amount of money into the index fund. And when all the companies go up in value, you take the average of all those companies. So that's the easier way to invest. And it's a safer way to invest. It removes a lot of risk. And you don't have to be an absolute genius to work out which is the best company to invest in. If you're invested in the top 500, chances are you're going to do fairly well if the market does well. Okay, so this is set up very, very similar. The only difference is we don't buy companies. We buy cryptocurrencies or coins. Now, how do we go about buying the coins and how many are there? Very good question. I'm glad you asked. We run a fund of about 40 coins at any one time. The reason we run about 40 is we want to diversify over multiple sectors. Now, in cryptocurrency, there's the buy and hold, the store of value like Bitcoin. There's smart contracts that Ethereum has. There's decentralized finance that different coins have. There's gaming, there's gambling, there's NFTs, there's all types of different industries within the industry. So what we've done is we've broken it into quite a few different groups, and then we've got X amount of coins under each of those groups, just so that we can diversify. And the reason I don't go specifically into the numbers is we change that from time to time based on what the market conditions are telling us. Okay, but at the end of the day, the funds are very, very spread out over a diversified fund, and we're looking for very high growth assets. How do we choose the coins? Well, the first thing we do is we have a premium sponsorship agreement with Palm Beach Research Group and also Stansberry Research. These are the two largest firms in the world that specialize in research for stock, shares, and crypto. So through our membership, we get to find out which are good quality projects and which are scams. There's 35 to 45,000 coins. There's 50 coins being made every 5 minutes. 90% of them are just scams. So the very first thing we do is we want to eliminate the scams. And it sounds easy. How do we go about that? Well, the research we get from Stansberry in particular, they give us full background history on people that are the developers, the owners, the people that are facilitating these projects. If they've been associated with any scams in the past, they're straight away eliminated. If anyone on the team has been associated with a scam in the past, eliminated. We've got so many to choose from that we can be very, very picky. So once we work out what a good quality projects are, and we understand where they're heading, what their roadmap is, what they're trying to achieve, and what sort of timeline they're going to achieve it in, we then do our research on those. What we're looking for is what we call an asymmetric bet. It's not a gambling term, it's an actual financial term. What it means is a very, very low downside with a very, very high upside potential. So asymmetric, not symmetrical. If we can find those and we get into these projects at the right price, then there's two things that happen. We either make a very, very small loss or we make a very large, significant profit. They're the only two outcomes. Okay, so most times we make the big outcome with the big profit. So how does it work from your side and what's the offer? Well, it's very, very simple. You don't need to know anything about cryptocurrency at all. You don't even know how to spell Bitcoin. You don't need to know how to spell Ethereum. It's all irrelevant. All you do with us is rather than being an investor, we refer to you as a lender. And I'll come back to the reasons why we have you loan us money rather than invest money with us, because it is important to understand. But as a lender, let's say you decided you wanted to loan us $100,000. That loan would go into our bank account. We've got an Australian bank account just to make it simple. We then convert those fiat dollars into cryptocurrencies. From there, it's invested in our fund and it's locked for a period of either 2 years or for 3 years. You tell us how long you want it locked up for. Upon maturity of that loan, we convert from cryptocurrency back to fiat currency and we pay that $100,000 back to you. If it was a 2-year loan, we also give you a 28% return on investment or $28,000. It was a 3-year, 48% or $48,000. So as you can see, just based on these numbers, this is much, much higher than a term deposit in a bank account. If you were to believe your $100,000 sitting in a bank account, you're going to get your 3, 4, 5%. It's much higher figures what we can do. The reason we can do it is because of the volatility that's in the crypto markets. Okay. Now, volatility is something that scares a lot of people. It's something that really excites me. I don't like something that's just going sideways and slowly going up in value. What I like to see is something that goes up in value very quickly. And cryptocurrencies bought at the right time will do that. Bought at the wrong time, obviously it's a two-edged sword. It can go the other way. And a lot of people that have had the horror stories that have bought the cryptocurrencies in the past bought at the wrong time. They bought at the top of the market and they sold at the bottom of the market and they told everyone how bad cryptos are. It's not really a reflection of the market, it's a reflection of the person buying them. So let me show you how we do this and how it's safe to be a lender for Black Diamond. This is a price chart, and to keep it really simple, this is a price scale, so $15, $20, $40, and this is a time scale, 1 week, 2 weeks, 3 weeks. Let's say Joe has a client that wants to invest $100,000. Raya has another client that wants to invest, say, $250,000. And so those funds go from from fiat currency into cryptocurrency into our fund. We buy what's called a stable coin with those. So they're pegged to the $1. So if we've got $350,000 sitting in stable coins, it just stays at $350,000. It doesn't go up, it doesn't go down, it just stays there. Now that'll just sit in our fund until we're ready to buy. Let's say we find this coin, this actual project, it's worth $20 per coin, and we've got $350,000 ready to invest. We'll spend the full $350,000 at $20 per coin. Now, normally, when we make a purchase, price goes up. Not every time, but normally. And the reason I say normally it goes up is we don't just buy because we've got the money. We wait until the market's ready for us to make that purchase, and that's the trading background. So we buy, it goes up to, say, $30. Everyone looks like a genius. Everyone's making money. Now, that's not reality, though, for it just to keep going up. If it did, you wouldn't need us. Everyone would be retired. The reality is price goes up, price comes back down. Price goes up, price comes back down. This is the volatility that we're talking about. Now, that's normal in any market. The difference with crypto is it can happen a lot faster. A move that can happen on the S&P 500 over 3 months can happen in 3 minutes in crypto. So we need to know what we're doing. We need to have a very thorough understanding of how the markets work, when to buy and when to sell. The other thing we need to do is use a stop loss protection order. Now, this is an electronic order. It's placed manually, but everything's electronic. Once it's placed, it's safe and secure. So we buy 350 grand worth at $20 per coin. Price goes up, it comes down and hits our stop loss protection order. We've lost money. Okay. Now, when I say we've lost money, Black Diamond has lost money. No client has lost any money whatsoever. We still have $350,000 of client money sitting here. How is that possible? People go, that's not true. Everyone's lost money. That's not the case. What we do is we run a hedge fund inside the index fund. Now, I won't go on with the big terminology and everything else. Basically, all it means is anything under the buy price is Black Diamond's own capital. So we use our own capital to offset any risk on client money at all times. Now, let's say it didn't hit the stop loss and it moved up and it kept going up higher and higher and higher. We grab this stop loss protection order and we drag it up higher. Okay, so in this case, let's say we got stopped out up here at, what's that, $41, $42. We're now over 100% in profit and we get stopped out. It's not a bad day. We've got 350,000 that's turned into over $700,000. Okay, what that means is we then wait. It's sitting in a stable coin. We wait for our next coin that we want to buy and the right timing in that market. When that happens, we go and buy it again. We might take a small stop loss or we might make a significant profit. Now, most of the coins we buy, we're buying for the long term. We're holding them for 2 years, 3 years, 5 years. Okay, but we also want to protect ourselves and not lose all the money that's in the fund. So we keep dragging our stop loss orders up higher and higher and higher. And eventually we do get stopped out and we're stopped out in a massive amount of profit. Okay, so this is an example only. The mathematicians that are listening, we never, ever, ever run a 25% stop loss. That's just ridiculous. Our stop loss order on a $20 buy would be at about $19.80. It's a very, very small amount of risk for a very, very big upside. In this case, it was 100%. Okay. Hopefully that makes sense. The main takeaway from this is, firstly, no one goes broke making a profit. And secondly, client money is always 100% protected through our hedge fund capital. Now, the only other thing to let you know here is as we get stopped out in profit or as we exit a position, all of that profit goes into our hedge fund. So our hedge fund over time is getting larger and larger and larger, which allows us to take on more and more investment from clients because we've already got the capital sitting in our hedge fund to pay out the guaranteed return of 28% or 48%. The capital is 100% secure because of the way we use the stop loss protection order and we use our capital to offset any risk. Hopefully that all makes sense. Folks, as far as raising $100,000, I just use that 100,000. It might be 200,000, it might be 50,000. The minimum investment we like to talk about is a 50,000 investment. Only reason being is if it's less than that, you're really not seeing a decent amount of return in 2 years or 3 years either way. So those of you that have home equity, you might have investment properties with equity. Most people call it equity. I call it dead equity. Unless that money is working for you, it's working against you. It's dead. So I'll show you a way that we can actually use that and it won't cost you a cent out of your own pocket. Another way is superannuation. Some of you will have industry funds. Some may have self-managed super. Once you've got a self-managed super, there's rules that you need to apply by, but following those rules, you can actually invest that money by lending it to Black Diamond. And we've got many clients that have loaned money through their superannuation. Okay, the minimum used to be 150. We've now got it down to 60,000 that we can actually use. For other people, you might have some shares or some managed funds, gold, silver, investment properties that aren't performing. Now might be a really good time with the interest rates going higher and higher to have a really good look over and just see what's not working for you and see where you can raise capital from. For others, it might be cash or what have you. Okay. For those that are looking to use some debt equity, this is an example of how you can get some access to this debt equity. Now, others may have already done this, where you've used your own home as security to buy an investment property. You take a portion of the investment against your own home to secure the investment property. There's no difference with this. The only difference is that this is an investment loan, so it's not for personal purposes. This money goes into the bank account of Black Diamond. We convert it into our crypto fund. Now, with a rental property, you have rental income that offsets the cost of this. Under this investment, there's no cash flow on a weekly or monthly basis. You get paid at the end of the maturity of the loan. So what we've done is for anyone that actually takes a loan against their property, we will cover the interest for you. So this loan is 100% out of pocket, no money. What am I trying to say? No money out of pocket whatsoever. So let's use easy numbers. Let's say it was a 5% interest rate. It's probably higher now, but let's say it's 5%. 5% of $200,000 is going to cost you $10,000 a year in interest. Black Diamond will put $2,500 into your bank account every quarter. There's the $10,000 over the year. So you've got all the interest fully paid. At the end of the loan period, whether it's a 2-year or a 3-year, we pay the balance to you into your bank account as well. Okay, so you're still getting the full 48% or 28%, less whatever the interest is. Now, talk to your accountant because this being an investment, there's probably a lot of tax deductions you can do here to get this money working even better for you as well. I won't get into that because I don't know everyone's individual circumstances, but there's a very high chance that you can get tax deductions on this money as well. Okay, so that's an example of using your own home or an investment property with equity. It's going to cost absolutely nothing whatsoever to hold this investment. You're going to get the full 28 or 48%, less any expenses that we've paid along the way. Okay. For those of you that haven't looked at your superannuation for a little while, you might get a shock. I know a lot of my clients got a huge shock. Super isn't performing as well as what a lot of us thought it was. Back in 2018, it did fairly well. 2019, not so good. And it's sort of been up, down, up, down, up, down until last year. Last year, it just fell off a cliff. Why did it fall off a cliff? Well, we printed a lot of money for funny COVID-19 little thing that went around. Next year is probably going to be just as bad as this year. And the following year is probably not going to be much better, but I've got some projections I'll run through with you. If you want to check these numbers, by all means, here's the website down here. The reason I use this website is just to see how funds are performing and to see if we can outperform those funds. Now, I think you've pretty much worked out we've already outperformed all of these from what we offer. Okay. For every $100,000 that's in your superannuation, if this year pays the same as what it did last year, which I'm expecting it will, it might be slightly worse than this. Forget contributions going in, your balance will be $95,400 because we've taken a bit of a hit. If you were to put that $100,000 into Black Diamond as a loan over a 3-year period, getting you 48%, effectively that's 16% per annum. So you'd have an effective rate of $116,000 there. Now, the reason I say effective is we don't pay it on the annual basis. We pay it at the end of the 3 years. 16%, 16%, 16% is 48%. So the real return for every 100,000 that you have in your super would be 148,000 guaranteed upfront in writing from Black Diamond. If my projections here are correct for next year and the following year, your 100,000 would have turned into 86,000 by leaving it in an industry fund. Okay, so not sure how you feel about it, but I know which way I'd prefer to go. For those that already have self-managed super, and a lot of you will have cash sitting in those supers, you'll have rental incomes coming into those supers. That's funds that could be sitting in cash or could be invested. Okay, so that's the sort of stuff we can talk one-on-one about, whether you're interested in moving forward using that money to invest into the fund. Okay. If you need help with financial planners or accountants, we can assist with that. Same with lending. I'm sure Joe's got some options there as well. Folks, the main reason I wanted to call you a lender and always refer to you as a lender and not an investor is for your own security. Now, a lot of what I've set up here has come from 25 years business. It comes from putting the client 100% first. As a client, you don't get to make the decisions to what coins or projects we invest in. You don't make the decisions on when we buy and when we sell. So for that reason, I think it's only fitting that Black Diamond and myself wear 100% of the risk. That's why I've set up the hedge fund inside the index fund, so that if I make a bad decision, it's on me. It's not on you at all. Your funds are 100% safe. Now, I've covered how we do that, but just to take to the next step, as a lender, if you were to loan money to our company, you're referred to as what's called a secured creditor. For the last 8 years, Black Diamond's made more and more money every single year. We're going into our 9th year of business next year. We've already got a massive balance sheet from the bear market where we sold out at the high. We've bought back 10, 15, 20 times the amount of coins at the low. And now as those coins grow in value, we're doing very well for ourselves. Thanks for asking. But that's what comes with 16 years of trading knowledge. It comes from understanding the markets and knowing what to do. Put all that aside. Let's say something went wrong. I don't know what, I can't think of an example, but let's go worst case scenario. Let's say the company went into liquidation. Where is your money? How safe is it? Well, it's 100% safe because all of our hedge fund capital stays in the money, in the fund until every lender's paid out. And that's part of the contract that we provide you. The other thing we do is we give you a loan certificate. Now, the loan certificate gives you the right as a first tier creditor to get your money first. Now, it's the same with every other lender as well. All lenders get their money before I'm allowed to access my money or the company's money. Now, there are no staff that work for Black Diamond. There's no overheads for Black Diamond apart from trading fees, bank fees, moving money in and out. They're the only costs to the business. So there's no staff that need to be paid out first. There's no other creditors that need to be paid out first. It's only the lenders. Now, I've purposely built the business based around this for 100% security on client capital and for the safety net of client money. If I'm talking to you about superannuation, obviously the idea of super is to have that there when you retire. It's not to lose it in a silly investment. Okay, so that's why I've set the company up in the way I have, and it's 100% secure to make it safe for you. Okay. Oh, let me jump back. Is now the right time to invest? Simple answer is no. The best time to invest would have been 2 years ago, before these crazy interest rates came, before all these property prices were going up, the rents were going down in normal properties. But we can't go 2 years back. Hopefully you've been listening to what Joe's been saying over the last couple of years and been investing. As far as this investment goes, now is an excellent time for superannuation. Now is an excellent time if you've got equity sitting in a home or you've got cash. I don't believe you're going to find anything on the market at all, anywhere in the world, that's not only going to give you a 28% or a 48% return over a 2 or 3 year period, but it's not going to guarantee the funds for you. We guarantee it in writing upfront. Okay. I'm very, very confident in saying that this is one of the best investments that I've seen. And it's certainly something that I wanted to be part of. And I'm obviously a very large part of it because it's basically my capital in the hedge fund. Okay. The only other thing I wanted to talk about here is that I do balance the fund on an annual basis. We're coming up to that very soon. And when I say balance the fund, I basically mean reduce these numbers of the payout. 5 years ago, we paid a lot more money out than what we're paying now, even though now sounds really good. We used to pay a lot more. What I want to do is make sure that we've always got the money in the hedge fund that we need to pay out prior to taking on more investment. So to make that 100% transparent moving forward, the only way I can do that is to reduce the payout. Okay, so until the 15th of December, this offer stands at 28% and 48% ROI. If you wait till next year, there'll be something on offer. I can't tell you what it'll be at the moment, though. It'll be less than this. Okay. So winding up, obviously, it's something that you need to decide if this is something I'd like to do, I'd like to be part of. If it is, then how much would you like to invest, and how are you going to go about finding that money? Are you going to do a refinance on your home? Are you going to look at superannuation? Do you have assets that you could sell? Do you have cash? Do you have an offset on the mortgage you could use, or so forth? Then it comes down to, would you prefer a 2-year or a 3-year? Okay. If it's super and you're not planning to retire within the next 3 years, then my suggestion would be look at the 48%. But you could do a 2-year and then renegotiate with us in 2 years' time if you want to roll those funds over and go for another 2 years or 3 years or what have you. Okay, we're 100% flexible. There's a couple of testimonials here. I can't actually play this for you. There's a video, but I will get this emailed out to everyone. And if you press play, you'll see a lovely video. These are some clients who have turned into really good friends. This is AB and Nix, or as you should call them, Andy and Nicole. They became clients a little bit, probably 8 years ago now, in my property investment business. Andy's a detective sergeant in the police force. He's bought 3 investment properties off us, and we've sold 2 of those properties in the last 2 years. We've rolled those funds from the profits into Black Diamond. So they're well on their way to becoming multimillionaires. They're in this for the long term. It's one of many stories, but press play when you get a chance and have a listen to what they've got to say. This is Jude Newcomb. He's a team member with a project that I'm also a CEO of. It's a volunteer role. I was the largest coin holder in this particular project called Metrics Coin. This is going back 7 years ago. And I said to the team as a bit of a joke, if you don't sort out what you're doing, then I'm going to take over as CEO. And they asked me if I would. And long story short, I'm now the CEO as a volunteer. And I kicked out the team and started again. But Jude's been with us for a bit over 5 years. He's also invested in the index fund as well. He's not a trader by any means, and he saw great benefit to doing this, but you can click that and watch his video as well. And guys, lastly, living in Bali, I wanted to give back. I've always had some sort of charity, some sort of way of giving back. I've got rescue dogs myself. I've got 6 of them that live with me. A lady from Bali Rescue Dog Squad helped me with one of my dogs that was paralysed from tick infections that I took off the street. And giving back, we've ended up doing a partnership with them. So it's Bali Rescue Dog Squad. This is one of my rescues. That's Luca. Out of every loan that we get, we give a donation as a percentage to Bali Rescue Dog Squad. They're doing an amazing job. The reason I wanted to throw this in here is we've also got banking details. If anyone's keen on Bali that are keen to help, $5 goes a long way, $50 goes a long way. So if you're keen to make your own donation, it's also tax deductible. Okay, folks, there's all my contact details. The only thing I haven't discussed, I don't think, is the location of the company. Correct me if I'm wrong. We're set up in Vanuatu. The reason we're in Vanuatu is because we pay our taxes in Vanuatu. It just so happens the tax rate is 0%. Okay, so there's nothing different from an investment point of view. If you were to buy shares in the S&P 500, you'd be sending your funds to America. If this is out of Vanuatu, it makes no difference. There's still a Financial Services Act. There's still 100% legislation around how funds can be moved. Fraud is fraud in any country. If I was to do the wrong thing and steal everyone's money and run away, then I'm going to go to jail in a different country. That's basically all that means. So if you want to have a further chat on that, if there's any concerns, it's no problem whatsoever. Folks, that's it in a nutshell. That's what we do as a business. That's what we've been doing for 8 years. We've got many really excited people that have been part of this, and most of our business these days is referrals, because people just are not getting the returns that we're getting. So I'd probably open it up to any questions. Unless I've done a brilliant job and covered it all.
You're going to have to unmute yourself to ask the question. Go, Lawrence.
Yeah, Trent, I was going to ask you questions that I spoke to someone a little while ago, and they asked, is there a minimum sort of balance that they can have just for a few days, a week or a month, that sort of thing? Like a cash balance sort of account? Is that something that's going to happen maybe?
We can't do that for the simple reason there's so much compliance that I have to abide by under self-managed super in Australia and also 401k in the US. We've got US investors. So we do proper reporting. We need to keep proper ledgers within our accountancy office in Vanuatu under the Financial Services Act of Vanuatu. So the minimum term we can do is a 2-year. We can't just do money in and money out. And the minimum we will accept is 25,000. The minimum we like to accept is 50. But if it's not 25,000, then the client's not making any money. 28% of $5,000 is it's just not worth their while, and it's not worth our while doing all the reporting.
Is there any sort of security that you might offer, or the company offers at all for people to put, that would save 100,000? What sort of security?
So we offer the loan certificate and a loan agreement. So the loan certificate is their security.
But that's not against no other properties, just against the fund, or
100% against the fund. It's against every single cent that's in the fund.
And so would we get a copy of what's in the fund, how secure it is at all, or to show to the accountant?
We don't show what's in the fund for the simple reason it's constantly changing. It's constantly moving. The markets are always moving. So that's why we call it a proprietary index fund, where it's a lender's agreement where you loan the money, and as a company, we have that obligation to pay back that loan. And that's what the documents go through. So there's a loan agreement that explains exactly how it works. It's exactly like the bank. The bank loans you money to go and buy your investment property. You have responsibilities, and so does the bank. At the end of that loan period, the loan needs to be paid back with the interest.
Are we able to get a copy of that loan agreement to have a look?
Yeah, absolutely. I'll get you a copy of the loan agreement, the loan certificate, and also the annual report that we did last year. So get your copies of everything. Yep, no problem at all.
So minimum is 2 years, you say. Now, the other thing what you said about if someone borrows money against the house, equity of the house, you pay the interest. So that interest be paid per month? Or?
No, we pay it on a quarterly basis. So the way we normally set that up is when they take a loan, they have enough sitting in that loan account to make the first 2 payments. And then depending on what month it is, because we pay out in January, and then in April, then in July, and then in September. So depending what month it is, we work with the clients to make sure they've got enough just to cover the first or the second. And then from there, every quarter, we put the money in their account. So it's sitting in there in advance. So they've got money to make the payments.
Now, do you have a limit of, for instance, interest rate? Let's say a home loan at the moment, 6% or what have you.
Whatever it is.
Right. What about if someone can get the finance, let's say, personal loan for, say, 12%?
As long as it's less than what we're paying out, it's not a problem at all.
Meaning less than 28%.
If it's a 2-year loan, then it can't be more than 14% a year because there's no profit.
Right.
Okay. So if it's against their home, it's going to be at about 6.5, maybe worst case, say it's at 7%. They're making 14. And that's why it's an absolute no-brainer. It's free income, and you're picking up tax deductions at the same time.
Okay. Thanks for that.
Okay. It's an absolute no-brainer. And obviously over the 3-year period, you're getting a higher return as well.
Okay.
Trent, if somebody's got money sitting in crypto already, can that be transferred you?
Yes. Yep, no problem at all. So on the loan application, you can use Australian dollars, US dollars, euro, or crypto. So they can transfer us crypto. What I would ask them to do though is transfer us a stable coin rather than Ethereum, because the price when they transfer could be totally different to when it's received. So if they can convert it back to a stable coin to a US dollar value, and they can invest that, that's not a problem at all. And then we can pay it back in crypto.
And if they wanted it paid into an Australian bank account, is that okay?
Yes.
From the fact that it's come in via crypto but going out into a bank account?
Whatever's in the heads agreement, in the loan agreement, is what we'll do. So we'll do all that at the time of the agreement. As long as we are not in breach of that agreement in any way, I'm happy to do it.
All right.
Okay, so if they want to pay in crypto and then be paid back in fiat currency, that's fine. We'll just do that in the agreement.
Oh, okay.
Or vice versa. There's no problem with that. I just have to be really, really careful with compliance because I come under a lot of different laws. So I just have to make sure that everything's 100% squeaky clean.
Yep. Got it. All right.
Okay, sounds good.
Other questions? No.
So if you, how does it work if you refer other people or friends over, whatever? How does that just basically doing them a favor, or is that?
We get paid. Yeah, we get paid referral fees for helping people make some money. So, yep, that's happy to pay some percentages there, which I can run through you know, depending off your putting your people in as well. Nothing for free. No, not expected to do.
Are there any other fees to get into this, to the page, for instance, you know, like you said, 100,000 for 2-3 years, whatever. What are there any fees up front that have to be taken into account?
No fees, nothing at all.
Wow.
It's very, very simple. 100,000 in, 148,000 back.
Yeah. It's an expression of interest form as well. So once that's filled in, then the contract, the loan agreement, the reports can come out to people. Okay, once we've got their details. Alrighty.
Sure.
And so
you've got a copy of that now, Joe. So if you want to send that out to people, then I'll get you copies of everything else.
Done. All right, shall do.
Thank you, everyone. If you've got any questions, feel free. I'm available. Happy to work with you. If you need me to help you with presentations to clients, that's not a problem at all.
All right. I have one question. I'm from India. This is Gavan.
Yes.
And I have a question touching base on this Joe's question. I've got few people in India. I know they have money in a Bitcoin. And so basically, if they can transfer from the Bitcoin wallet, right?
Yes, not a problem at all.
How does the AML work on that part? One. Second, as you explained about the receiving the money back, but now money back into their respective receiving account. So that can be an Indian account, or it has to be an Australian account where they nominate, or can they open an Australian account being an Indian citizen sitting in India?
Okay, let me break that down. If they want to pay in crypto and us pay them back in crypto, there's no problem with that whatsoever. On the actual loan agreement, you can select how you want to pay, whether it's in Indian rupee, or if it's in Bitcoin or what have you. If they want to pay with cash, with fiat, then we have an Australian bank account that they can put the money into. So it'll just be a transfer from their Indian bank account to the Australian bank account. Alternatively, we've got a bank account in Vanuatu, but it's probably just the same to use the Australian bank account. So if they need it paid back to them into their Indian bank account at the end, that's not a problem at all. They can just let us know what their bank account details are and we'll pay into that. No problem whatsoever.
All right, that's great. And AML part?
AML? So the AML is quite simple. It forms part of the agreement. There's 2 paragraphs in there on AML. There's also on anti-terrorism and so forth. It's part of the actual agreement. There's no restriction on trade between countries. As long as the agreement's signed prior to funds being transferred, we're in compliance.
Very good. Thanks. That's explained well. Yeah, fine.
Okay, great. Any other questions, anyone?
Yeah, I was thinking, Devang, this is a way for people to get cash into Australia, okay, of your clients, colleagues, etc. Can take them 2 years to get here, but they're making money at the same time. So very good way
absolutely.
to have things moved around. All right, wonderful.
We can always, on something like that too, if we need to amend a bank account in the agreement down the track in a year's time, they've got a different bank account, that's not a problem. We just get them to sign off on a form for full disclosure. Just put yourself in my position. Everything has to be 100% above board. Everything has to be 100% squeaky clean. As long as we can tick every box and it's squeaky clean, then I'm happy to move forward with it. If it's dodgy in any way, I'm not interested.
Okay.
Yeah.
Trent, I've got one last question.
Sure.
Trade currency, barter money.
There's probably, I can't accept it. There's probably a way they can convert that into fiat. But yeah, it's something I can't accept.
All right.
Thank you for asking.
He's got heaps of that.
Yeah, Lawrence has got clients with a couple of $100,000 of trade money.
Yeah, because I can't spend it anywhere.
Exactly.
Takes a while.
Sorry, one question I had in my mind earlier I wanted to ask. So when you say it's a loan agreement between the company, right? So basically they are creditors. But is it a personal guaranteed, like the agreement that you have is a personal guaranteed agreement, right?
Yes. Yeah, it's company and personal. And when I say personal, it's 90% of my funds are in the hedge fund. So the more money I make out of this business, the more money the hedge fund has. Now, I cannot withdraw any of my funds until every lender's paid out.
Yeah. Okay.
That's in the agreement.
Okay, but now, how are those...
Sorry, just one second. Sorry.
Okay, how will those rules apply to the Australian, asset? Basically, because if it's overseas, the company's overseas, they won't have any control over it.
The full control comes out of Vanuatu. Vanuatu is almost identical carbon copy of Australia. Australia has set up most of the financial services regime for Vanuatu. So the only difference in Vanuatu is it's a little bit more stricter because people set up offshore companies out of Vanuatu and they had to tighten the hatches a little bit. So at the end of the day, it really doesn't make a big difference whether it's there or Australia. It's the same regulations.
And Australia recognises the Vanuatu companies or not?
Every country recognises every other country's companies because there's a company deed and the commission of a company. But as far as, I guess self-managed supers are probably the best example because there's so much compliance that happens for a self-managed super. Each year it needs to be audited by an approved auditor. Now, for the last 8 years, our clients have been audited. They've all been audited. There's been no problems whatsoever. Lots of questions asked, but all the documents have been provided. And it's just been tick, tick, tick. So it's just not an issue. It meets all compliance rules.
Yeah. Okay.
Same in America, the 401k, which is what the Americans have as their superannuation. We meet all those rules as well.
And Gavan, you had a question?
Yeah, and that'll be black and white, in a black and white, the fund cost imposed on this funds, right?
Sorry, say that one again. I didn't catch what you're saying.
So your hedge fund would charge also as a management fee, right?
No, there's no management fee whatsoever. The way it works is, in that example where I showed you before, where we went from $20 to $42.
Yeah.
That one example, that's made, call it 100% profit. That profit goes into the hedge fund, and same with every position that we exit, all the profits go into the hedge fund. So the way we make money is whatever profit we make. Out of that profit, we pay that guaranteed return, 28% or 48%. Everything left over is our profit, so we don't need to charge any fees.
Okay, and that fund is actually, sorry, that fund is registered with Vanuatu, right? This.
Well, it's the company is registered in Vanuatu. The fund itself is on the blockchain.
Blockchain, okay.
Because we're 100% crypto, so we're in safe storage, cold wallets. We never leave money on exchanges. People would have heard of FTX, the big exchange that went down and people lost hundreds of millions of dollars. That won't happen to us for the simple reason we never ever leave money sitting on exchanges. We put our money into the markets, we do our transaction, we get off the market. We hold everything in cold storage, but everything's secured by the blockchain.
Okay. And they don't have any. They don't have any. The investors don't have any intervene in your functionality, right? So they don't need to know what you do, right?
Correct. It's simply a loan and a repayment of that loan with interest.
Okay, I got that. Yeah.
Yeah.
Okay.
Yeah.
Now, if someone wants to go for 2 years, 3 years, and the financial situation changes and they want to, go to 2 years, so obviously they'll be able to negotiate that or could work that out.
No, the funds are locked for that period. So this is where we need to agree up front whether it's a 2 or 3 year. If there is financial hardship, then obviously we can talk to people, down the track, in that circumstance. But if they opt for a 2 year, it's locked for 2 years. If it's 3 years, it's locked for 3 years. The only other clause that I have in the contract is a clause that allows me to pay out everyone early. So even though they're on 3 years, come January next year, if I want to close it all down and access the funds that are in the hedge fund, and the only way I can do that is to pay everyone out, then I have the right to pay everyone out early, but they're paid out at the full amount. They still get their full 28% or 48%.
Right. Okay. That's fair enough.
Yeah. So there's no penalty to the clients. It's just I don't want to lock myself into having to wait that long if I want to get out earlier.
Yeah. That's fair enough.
Okay. Too many questions. Sorry, one more thing. And this hedge fund is insurance backed. Is there any insurance?
No, you can't get insurance for hedge funds in crypto.
Okay.
So the backing is the asset itself, and as that asset is continually growing, there's some things we haven't broken down. I don't normally get into with clients, but sometimes I'm not just holding a coin. Let's say I buy Bitcoin for $20,000 and I hold it to 60,000. That's a good earn, but some coins pay dividends as well. So while I'm holding that coin, I might also be getting a 30% per annum dividend on that coin. So I've got it going up in value, plus I've got the dividend. All of those profits are going into the hedge fund.
Okay.
So there's multiple income streams that we generate using this money.
Okay. All right. Appreciate it. Thanks.
I'll give you a very rough example. At the start of this year, January 1, we are up, I don't know this month, but as of last month, we're up just over 600% this year today.
Okay. Fascinating.
So we're not going backwards by any means. We're doing very, very well for ourselves.
And you see it's growing year by year?
Sorry, say that again.
It's growing year by year? The return
it doesn't grow every year because there's a bull market and a bear market. So we normally have 12 months of bull market and we get 1 year of sideways and 2 years of downtime. But we normally sell out a lot of our positions at the top and we buy back at the bottom. So when we buy back, we're buying back 8 to 10, maybe 12 times the asset base that we used to have. So from an asset point of view, yes, it's definitely growing all the time. From a US dollar or Australian dollar point of view, some years it isn't growing, but the assets are growing. So then when it starts growing again in the next year or the year after that, we're growing exponentially. And that's how we're up so much this year, because there's so much, we had such a larger asset base at the start of this year.
Okay. And who does the investment calls? Yourself and the managers?
Yeah, I've got a team, but if they're doing it, then they're going to want a commission out of it. So for yourselves, if you've got clients that you'd like to refer, I can do the presentations for you. I can work with you. If you learn what we've been through, you can do presentations yourself, no problem at all.
No, not that call. Like where you invest.
In the investment decisions.
Yeah.
Okay, the investment decisions are solely from myself after we do the due diligence, the research through Palm Beach Research and Stansbury Research.
Okay. All right. Excellent.
Yeah.
Thanks.
So those decisions are made by myself.
Okay. Great.
All right,
Thanks.
guys, time to disappear. So,
Okay. Thank you.
Thank you so much,
interest will
Trent.
come your way.
Thank you, everyone. Great to say hello to everyone.
Yeah,
Done.
lovely meeting
All
you
right,
again.
yeah, great stuff. Thanks for your time. See
Cheers,
ya.
guys.
Thank you. Thanks. Bye.
Thank you.